also the instructor, Delonte, definitely make sure that any questions that you have does not go unanswered. Very genuine, very transparent, and really loves what he does. And that's one thing that I look for in a mentor.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Sharing what he's learned with others by hosting courses on investment strategies.
To be able to pass that knowledge on to other people, it makes me feel like, I'm doing something that's valuable in life. This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
First thing I want to let y'all know is you can start a trading account with as little as $10, all right? And if you're not greedy and trying to get into this and try to make a whole bunch of money really fast, you would understand that even getting into it with $10, maybe you may not make a lot of money, but you can begin to learn the markets with some skin in the game.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
But what this lesson is about is, like I said, for the working person. You do not have to be in front of the computer to actually participate in the foreign exchange market. Did y'all know that? Did you know you don't have to actually press buttons to participate in the foreign exchange market? You don't always have to be in front of the screen.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Welcome to Markup Mondays, where every Monday at 8 p.m. Eastern Standard Time, we analyze the financial markets, educate the community on trading and investing, discuss world news and popular topics. I'm your host, Delonte Brady, Chief Analyst and six-figure earner with Bold People Get Rich, and here are some things you need to know about this broadcast. During the market analysis portion of this call, we often find areas in the market to trade or make our investments. To be updated on these entries, exits, and trade management, make sure you tap the 3 dots on my Facebook page and change following to favorites. This way, you'll never miss an update. To receive investment knowledge, exclusive deals, and updates, click the link tree in my bio and subscribe to our mailing list. If you're viewing this broadcast on YouTube, to be kept up to date, make sure you hit the like button and subscribe. This is an event made for the people, by the people, and we love to hear your feedback and answer your questions during the show. So please feel free to comment as often as you like. Lastly, all forms of investing do involve risk of loss and is not suitable for all investors. Increasing leverage increases risk. Before deciding to trade in any financial market, you should carefully consider your financial objectives, level of experience, and risk appetite. Any opinion, news, research, analysis, price valuation, or other information contained in this video does not constitute investment advice. No person or persons in this video is a financial advisor. All right, welcome to the call, everybody. What's going on? Moses, Letitia, Olivia, Latrice, Shay, Larry, Alicia, Ross, Lou, Felicia, James, what's going on? Christine, what's going on? Dame. Welcome to the call, everybody. Welcome to the call. So tonight we're gonna go heavy. I'm pretty sure y'all got a clue from the chat today. We're gonna go really deep into Fibonacci today. Like today is gonna be about the Fibonacci, understanding retracements and extensions, and just repetition, going over it over and over and over again. Please, anybody in the class, if you have any questions, do not be embarrassed to come off mute and ask if there's anything that you don't understand. The quicker you can get this down, the better. You know, you don't have to sit there and be embarrassed or be afraid to ask a question and then not get the information or not get it down. All right, you guys are invested into this education. We do not have time to waste. Nobody on this call has time to waste, and we want to get this down. All right, so I encourage anybody who has any questions, if you don't understand anything, please come off mute, ask the question, or drop it inside the chat. And if I don't see it, you know, somebody on the call will. Before we get into the lesson, who on the call is live trading? Like trading with real money. How many people? Just drop a 1 in the chat if you trade with real money already. Anybody? Okay. Trying to break before us, trade crypto daily. Okay.
Did you ask the question?
Yeah, what's going on, Khalil? So I was asking if anybody on the call traded with live money to just go ahead and drop a 1 inside of the chat.
Okay.
So if you trade with live money, I just want to give you guys a heads up about what's going on in the market, and you know, just be careful. Just be careful in the markets because they're a little more unpredictable than usual. We got this situation with the, I believe it's called Omicron variant. You know, I'm not a panic, I'm not a fear monger. I'm telling you guys, not because I'm afraid of it, but because investors are afraid of it. And because investors are afraid of it, the markets are, you know, moving in a weird way. And like I said, when the markets become less predictable, then that means that it's time for you to shave risk. If you're trading in the markets with live money, you should shave risk. And what I mean by that is if you're practicing risk management, you're trading, I don't know, you're risking 5% per trade, 3% per trade, whatever it is, cut that in half. Cut that in half, because honestly, your probability of winning trades is being cut in half because of the volatility and the unpredictableness that's going on in the market right now. Not only do we have the Omicron variant, this is also the week of NFP. And some of you guys probably seen today a crazy move. We're going to talk about that and what you should look for when you see things like that happen in the market. But yeah, I just wanted to give a heads up to everybody that's trading live. Just shave your wrist this week.
Shave your wrist. All right, so let's get into it. Can everybody see my screen? Everybody that's on camera, just give me a thumbs up.
Yep.
Go. Okay. All right, so let's get into retracements, extensions, and the Fibonacci tool. So as far as the Fibonacci tool, I'm only going to go over the retracements. We're not going to go over the extensions on the Fib, but we will go over extensions as far as market structure. So earlier I placed some chat. We had leg 1 and leg 2, and I was asking what would be 50% of leg 2. So can anybody tell me, you can type it in the chat or you can come off mute. When looking for the retracement of a downtrend, we pull the Fib from the what to the what?
From the bottom up?
On a downtrend?
Yes.
The top to the bottom.
The top of the last into the bottom to the current.
Yep. Good job, Christine. Thank you for coming on and participating. That's good, but this is how we learn, right? So in a downtrend, we're going to pull from the top to the bottom, or the top of the last extension to the bottom of the extension, all right? Or the end of the last retracement. It's either this could be considered, this right here, this could be considered the end of the last retracement or the top of the extension, right? So in a downtrend, we want to pull that Fib from the high to the low. And you can drag it over so you can actually see. And we see we have 50% right here. So if I was to take a horizontal line and drop it right there on the 50%, and I could literally, the best thing to do is to label it. Right? So I'm gonna put 50%. And then to get the mess off the screen, I'm gonna delete the Fib because I got my measurement already. So that would be considered 50% of this overall extension down. All right, does anybody not understand that?
Coach, could you show that move one more? Can you show that one more time?
Where I will pull the Fib from in a downtrend?
Yes.
So in a downtrend, you want to pull the Fib from the top of the last extension to the bottom of that extension, or the current extension. That's your measurement. Or you could say the end of the last retracement, right? Because we have this extension down, and then this is a retracement, right? And so at the top of this retracement, or at the end of this retracement, that's where we want to pull the Fib from, right? From the last, that high, down to the low. Now, I want everybody to keep in mind, we are looking at this from a higher time frame. This is the daily. And so within leg 2, Tasha actually pointed it out, or she measured from it on her chart. There's moves within moves because the market is fractal. So we're looking at this as a whole leg from the higher time frame, but there's actually pullbacks and extensions on the lower time frame as well. So if we drop down to, let's say, the 1 hour. So within this leg, we'll make this a different color. Let's make this something that we can see. Let's make it purple. All right, so within this leg, we have a high to the low, right, which is the same high of leg 2. But within that, we have a lower high, we have a lower low. Lower high, lower low, very small pullback. Lower low, very small pullback, lower low, lower high, lower low, small pullback, lower low. All right, so we got a lot of lower highs and lower lows within that leg. And so how do you know what to pull from? You always want to be looking at the higher time frame. And the reason why I'm teaching you guys this is because the higher time frame is where you're going to get your higher probable trades. What's happening on the higher time frames is important because who moves the market is who is on the higher time frames. All right, institutions, people who actually, the institutions, the banks, they have the capital to actually move the market. The market makers are who are controlling the market. Is somebody going to say something?
Yeah, I got a question. I'm going to interrupt. I just had a quick question. So are you saying that we should only place the fib on the chart on a daily time frame? Is that when you can it makes more sense for us to place it on there, or we can place the fib on a smaller time frame?
You want to use it on all time frames.
Oh.
Yep, you want to use it on all time frames. But the higher time frame is going to give you the direction of the lower time frame because the higher time frame trumps the lower time frame. So if we're in a downtrend from the higher time frame, I want to be looking for sales around the 50% and 618 of this move. So what that means is what I can do is in between the 618 and the 50%, I can mark up my chart. I'm gonna label this red so I know that it's a sell zone. And when I drop down to the lower time frames, say we're on the 15-minute right now, it's a lot more detail down here. So once the market comes up into this area, now that we're on the 15-minute, you see this is actually a wide area to cover.
Right.
It's no way for me to get precision with this is a 60 pip range. All right, so this is a range of 60 pips. So what you do is now that you have your higher time frame bias, now that we know this red area is where we would want to sell from, once the market comes up in this area, if it comes up in this area, all right, how do you know where to sell from? You don't. So what you do is you wait for the market to come to that area and you let it do its thing. It may come up here and start consolidating like this, and you don't want to get caught in a sale like that. But what you would like to see is a major break of structure. So if you've seen something like this, a strong move down, and then another strong move down, breaking the previous low. Now we know if we zoom back out to the higher time frame, this was a logical area that we're supposed to be selling from anyway. And where are my targets at? If we're selling from up here, where are my targets? The last low, this low right here, because we should see something like the previous movement. If we have a pullback and we're expecting it to go further down, then we should expect the market to continue down further, which means from the lower time frame, I can be looking for sales once this starts to happen. And now I got all these sell opportunities from all the way up here, all the way down to the last low. And so that's how you form your directional bias on the lower time frame, and you place higher probable trades. You start from the higher time frame, you see what's going on, because that's where the market makers and institutions, they're looking at the market from the higher time frame. They're not down on the 15-minute, they're not down on the hour, they're moving huge lots. And so they're looking at it, and if they're controlling the market, that's what we want to get behind. Is this all making sense to everybody? If this is making sense, drop a 1 in the chat. If it's not making sense, drop a 2. Yep, top-down analysis, exactly. All right, so this is how we get these high probable trades. This is how we get these high probable trade setups, is just simply starting at the higher time frame, understanding what direction institutional order flow is headed, and then dropping down to the lower time frames and using basic knowledge, basic market structure on where to enter. And so, Latrice, you were asking, where
I'm
do
back.
you use the fib? Yeah, you were asking, where do you use the fib? Do we just use it from the higher time frame? You can use it on the lower time frame too. So as this starts happening, let's say, for example, this right here, we had an extension down, we had a break of structure. This is a pullback. And we had another extension down. So once I see this happen, and once I see this low get broken, as soon as this starts to turn around and creates that lower low, once it turns around, that's when I want to pull out my fib tool. And I want to pull it from the high to the low. And I'm looking for a 50% to 618 retracement.
Mhm.
Now, I don't want to just rely on the fib. You also want to make sure that there's market structure going on to the left too. Remember confluence. Remember that lesson, confluence. You want to have more than a few reasons of why you're entering a trade in a specific area. So we have the 50% of the fib here, and then maybe to the left we have an old support or old resistance. But this is how we use it on the lower time frame. This is where I would want to take an entry. And then as far as your trade setups, that's completely dependent on you. For me on EU, I always take 20 pips automatically. And then anything else, if I'm trying to hold a position, my ego position, I'll just set my stop loss to break even. But that's another lesson. We want to focus on the fib tonight. All right, so let's go ahead and let's keep using the fib on some real life examples. Let's just let's actually head over to UJ. Okay, UJ, because I believe somebody on the call trades UJ. And drop what pairs y'all trading too. Drop the pairs that y'all trading inside the chat so I can go take a look at those. Like as I'm teaching y'all, I can teach y'all on those pairs as well. So from the higher time frame, UJ is really, it went into consolidation here, and we created a higher high, but we created a lower low. So this is technically consolidation within an uptrend. Within an uptrend, because if we go to the daily, we see that we've been creating higher highs and higher lows. All right, so overall, this is in an uptrend. Family parent created equal highs. There's more advanced lessons. And so from the higher time frame, let's go ahead and measure these pullbacks and these, just the pullbacks. So from the low, we have an extension up that broke all of these lower highs. And then we had a pullback. Had an extension up, another pullback. And we had another extension up, pullback. We'll count this whole thing since we didn't come below here. We'll say we came all the way up here and now we're starting to pull back again. So what I would do is pull my fib from the high to the low. Where did that retrace to? 38%. And what does a 38% retracement represent? What is that called when a market retraces, to the 38%, or not all the way to 50%? What is that called?
Shallow retracement.
Good stuff. Who was that?
Angel.
Angel. Good stuff, Angel. Yes, that's a shallow retracement. And what does that represent? Like, what does that usually mean when there's a shallow retracement?
Momentum.
Possible. Yeah.
Momentum. Yep, represents momentum. So a shallow retracement represents a lot of momentum. The deeper the retracement, the less momentum there is. All right, 50%, that's halfway. That's usually the sweet spot. 618, that's another sweet spot. Once you get down into the golden pocket, the 70, 79%, now that trend is losing momentum. It's weaker and is more likely to be reversing at that point. All right, so 38% retracement. Let's pull from this low to this high. How much did it retrace? About 70%, and they played around in this area for a while before it ended up extending up. All right, and we will pull from this low all the way up to this high. And where have we retraced to?
618.
Really close to the 50%. And right now we broke back up above the 38%. And it's no telling what the United States dollar is going to do, but I'm just showing you guys this in the purpose of how to use the Fib. Let's drop back down to the lower time frame. All right, let's go over consolidation really quick. So this is consolidation, right? Everybody knows that that's easy to spot, easy to identify consolidation. But the reason why a lot of people's submissions got rejected on that consolidation assignment is because people were boxing it up. And what I wanted you guys to do is actually show me the highs and the lows, because I want you to be able to identify consolidation even when it looks like an uptrend. It may look like an uptrend, it may look like a downtrend, but you need to know the rules of the highs, the lows, the higher lows, and the sequence that they go in, because once that sequence gets broken, then you can decide what you want to do next. And it's going to, like I said, it's just another one of those details that's going to give you a higher percentage of winning and guessing the correct direction of the market. So we'll use this for example. We had this consolidation here. We broke out of the consolidation here to the downside, and then we started to trend up. And what did we start creating? Low, high.
Highs, higher lows.
Yep. Higher low, higher high. Actually created a lower low here, right? Because this low is lower than this low.
Mm-hmm.
Then we created a higher high. And then what did we do? We created a lower low, lower high, lower low. So with all this going on, it looks like it was uptrending and it looks like it's starting to downtrend, but all this is consolidation, because we're in the consolidation zone. We consolidated over here. And so this zone just happens to be a consolidation zone. And all the market did was it broke out to the top, clear liquidity up here. And now we've come back down to the bottom and we're clearing out any liquidity below here and below this low right here. All right, so this is why I encourage you guys to mark up these lows and these highs like this, and to don't get in the habit of doing this. You want to be able to look at the highs and the lows. All right, let me look in the chat and see you guys. All right, EU, GU, GJ, US 30, gold. All right, let's go look at gold. Gold is kind of like in a downtrend. All right, for the purpose of using the fib, boom. Okay. Broke out. Okay. High, low, high, lower, low. Because this low went lower than this low here. We really just dropped. But we could say it's from the top of this consolidation. So be considered the whole move.
Yeah, that's the reason. Like my submission in the chat was EU because I couldn't get a beat on it today.
Yep, so the highest point at the consolidation down to the lowest point before the pullback here. And then we created a lower low here. So this is the lowest that gold has came. And now this is consolidation. This is noise. It could either go above this or it could go below here. Now, what percentage of this did it retrace? If you come down to this low right here, pull it across, almost about 38%, which would be a shallow retracement, which should mean that gold should be continuing to sell off. And because we've had this strong push down right here on the 15-minute, and we're really hanging out really close to this low right here. I mean, like really close. I wouldn't be surprised if gold continued to sell off and doesn't come back above this high. And if it does come back above this high, I still would be bearish on it because I believe they would just be coming back for some imbalance to sell off. All right, but another example of using the fib. Does that make sense? Everybody good? No questions? All right, so what I wanted to show y'all on EU, and this is a concept that y'all can apply to any pair that you trade. And I want y'all to remember this. So y'all see this move right here? Y'all see this? What happened today? Does anybody know why that happened? Anybody know why that weird movement? Like,
was that around midnight? That was around midnight. And a few pairs did that.
Nope, wasn't around midnight.
Oh, wasn't? Okay.
Was it a news release?
It was a news release. And that was around, so James.
Oh, that's the 15, you on the 15-minute, okay.
When I had my, I didn't have my crosshairs, but down there at the bottom, so this was around 10 o'clock. So around 10:30, in between 10:30 and like 11 o'clock, this strong movement happened. We got a lot of volatility that came into the market. And if we go to our economic calendar and we see what happened around that time, 10 o'clock, what it really was So we had some orange. I see we had all these orange folders. Then you had this one red folder right here at 10 o'clock where Chairman Powell started speaking. So Chairman Powell, when he started talking, when he talks, investors listen and they make decisions based off of what they believe he's saying. So when he was talking, he was just saying that basically they're going to speed up the process on tapering bond buying, which that's going to be, it's not good. Basically, anybody who's borrowed any money, the PPP loans, the interest rates are going to go back up, and it's about to be a time to start paying that money back, basically. And that's not really good for the economy. And that's really signaling weakness for the dollar. And so you would think that with that being the case, you would see the dollar head down. But instead, what happened is they ran up. And that's because news is used as an excuse, right? It's all a game. I've been looking at this stuff for 3 years. I know I'm a conspiracy theorist, but this is a conspiracy that it really just is what it is. They show their hand all the time. And it's a part of the reason why I'm able to snipe the markets, and why some of the students are able to snipe the markets like we do, is because news is an excuse. All right. So what they did was they ran up. I mean, this looks crazy. Like this is abnormal movement. They faked the sale. They came down. They took out this low here, and then they shot the market back up. And anybody who was selling, they cleared those stop losses, and now they're bringing the market back down. Now, do I know which way it's going to go? I have an idea, but honestly, I don't, because this is consolidation to me, and this is too big of a range. And so what you have to do when something like this happens is you have to sit on your hands. You do not want to guess on which direction the market is going to go, especially during NFP week. So this is what you do. You take a trend line, you go to the top of where the move happened. Get my colors right, sorry, y'all. Mark that up, you put a line. You go to the bottom, you put a line, because there is no telling what direction this is going to go now. Why? Because y'all remember this? Remember we talked about this last week, this specific high right here. And I was saying that if it is going to buy, we will want to see this high over here get broken. This was a major high. What did they do? They came up, they poked right above that high. Then they brought the market right back down, and they poked below this low right here. And so what this is telling me, this is giving me permission on both sides. They came and they swept this high here, and they came and they swept this low here, and they're staying within the range. And so what this is telling me is that if we creep up here and we start to break above this high, then I'm targeting this imbalance and this original sell zone up in this area. Let me head out to a higher time frame and mark it up so y'all can see. Remember, this is the sell area that I want to see it come to. And this will be the first area that I would be expecting resistance and where I will want to take some profits. More than likely, I'll be able to take 20 pips before that happens, right? So 20 pips is all the way down here. It's like a 60 pip distance to this sell zone, and like over 100 pip distance to this sell zone. All right, so I zoomed out to show y'all that once we break above this high, then I would be looking for buys. But if we break down and we start to creep towards this low, now I'm going to be targeting this low down here. And I'm also going to be targeting some higher time frame targets over to the left. because we have a lot of imbalance to fill here. All right, so this happens. I'm not gonna say it happens a lot because it takes time. I mean, NFP is every month, so that might be some time for people. But anytime you see something like this happening, you following market structure, be patient, sit on your hands. Please don't try to guess the direction because you're just gonna decrease your chances of winning. And you increase your chances by just waiting. They've given us the signals already as far as what they could possibly do. They swept this low, so if they continue up, they already took this low here. They already took it. So if they come back up above this area, more than likely they're coming for more highs and more imbalance. They've already took this high. So if they don't come back up here and instead they go down, then we're looking for it to continue down. And that's a simple philosophy that you can add to your trading and to your analysis, and it's gonna help you out a lot. You see big moves like that happen, you feel like you don't know what to do, box it up and wait for either side to get broken. That makes sense, y'all?
Hey, Delonte, second sell zone. Why did you box it up from that second sell zone?
This sell zone up here.
Yes.
So to the daily. The reason why I have this area boxed up is because that's the last area of institutional movement. Remember, institutions have to buy to sell, they have to sell to buy. So anytime there's an up movement before the move down, I'm paying attention to that area. Anytime there's a down movement before the move up, I'm paying attention to that area. And from the daily time frame, we had this white candle right here, run up, clear all these highs. And from this point on, the market just has been dropping and we haven't come back to that area yet. So this is a target for me where I believe the institutions are coming back to break even on their orders, to close out orders, whatever it may be, to continue selling off. And even if it doesn't continue selling off, more than likely, we're going to get at least a rejection, even if it does continue up. And if that happens, there's still opportunity to catch the sell or the reaction in this movement right here.
Thank you.
No problem. Anybody got any questions? Any other questions? Okay, so I'm gonna open it up for Q&A. Did I go in enough on the fib retracements? We didn't even go over extensions. We just went over the retracements. Is that we good on the fib? Everybody cool on the fib? Good. Cool.
I'm good. Okay.
Good. All right. Well, we got a couple minutes left on the call. Does anybody know how to screen share? Anybody know how to share their screen?
Can you screen share from my iPad?
Yep. All right, so what I want to do is have y'all pull up y'all pairs and just show me where y'all would measure the fib from.
How do I share it to you?
What I'm gonna do is make you the co-host. So now you should have permission to share. So now that you have permission to share, it's a green button down at the bottom that says share screen.
Oh. Mm-hmm.
James said, unless you got some secret Jedi fib tricks. Actually, I do, but that's in the later lessons.
Wait a minute. Can you see that?
Yep, we see your screen. We are looking at the euro versus the dollar on the 45-minute.
Yes, that's mine. Hold on.
And just for a challenge and just to challenge you, because Euro USD, I go over that by default. Let's look at USHF. Let's look at USD CHF. The US dollar versus the Swiss franc.
What's this? What's the Swiss?
CHF, USD CHF.
CHF.
And so what I want you to do is find a trend and then just measure a retracement in the trend that you find, any of the retracements. But the trend has to follow the rules. You got to have either a low, a high, a higher low, and a higher high, or a high, a low, a lower high, and lower low. You know, if you want to, you can scrunch your screen up too, so the candles aren't so long. That column over there to the right. Yep, there you go. Might want to scrunch it up a little bit so you could see more information the other way.
Down here.
Yep, there you go. The other way on.
All right. Oh, okay. All right, let's see. Oh, wait a minute. So let's see. So I can start from wherever, or should I just start from right here?
Wherever you see a trend, if you see a high, if you see a high and then lower high, lower low, lower high, you can do that. Or if you see a low, a high, higher low, higher high, and you can do that.
Okay.
I want everybody to look at how she's using the anatomy of the candlestick to identify the highs and the lows. You can't necessarily see the zigzags in the highs and the lows, the lower highs and the lower lows that she's identifying right now, but she's using the anatomy of the candlestick.
Is that right, Dante?
Yeah, you're doing right.
Oh.
Yep. And so that's all you need right there. You got your high, you got your low, you got your lower high, you got your lower low. So now what I want you to do is, can you tell me how much of the first, from the first high to the first low, how much did that retrace before it dropped even lower?
Okay. Let's see. Okay.
Yep, there you go.
To low.
And what you can do is drag it across to the right.
Oh, the whole thing.
Yeah, the fib. There you go. Yep.
Oh, and it right there.
And so, how much did that retrace? I can't really see the number.
50.
See, that's I don't see that number.
Yeah, it look like 50 to me.
Okay, so what you can do, double click on your fib. It's another learning opportunity for everybody. You got to double click on it.
Right click or left click?
Are you on an iPad or your laptop?
I'm on my laptop.
Okay, yeah. Left click on it.
Okay. Fib retracement.
Okay, so go to scroll down a little bit.
More.
Down.
That's the end.
Labels to the right.
Okay, yeah. Put your labels to the right.
Okay.
There you go.
And okay.
Yep.
Okay.
And yeah, so that's a lot better. So now we can actually see.
Okay, yeah, I see.
Yep. So it retraced. How much did that retrace?
Let's see. From the top, from this point to this point.
No. So that's the extension, or that would be, the first extension. But how much did it retrace before it continued down even further? So you got your high to your low, and you pulled your fib from your high to your low. Now, how much did it retrace before it continued down further?
Is that 50%?
Yep.
So it's right here where my cursor is?
Right, but can you follow the whole thing for me with your cursor and just follow the movement where it happened?
Okay, so go right here to stop right there.
Yep. But you got to follow it to that low that you identified, from the high to the low. Yeah, there you go. And then from there, it retraced.
Oh, back up. Oh, I see it right here.
Right. And then from there, it continued down to the next low that you identified.
Got you. Okay, I get it.
Yep.
Oh, okay, I get it.
That's it. This is what it takes. Good job.
Okay.
Good stuff.
Great job, Latrice.
Thank you.
Definitely good job.
Yeah, good job.
I finally see
it.
That was nice.
Good job.
I see it. Wow.
See, sometimes that's all it takes. A little bit of pressure. Pressure either bust pipes or make diamonds, right?
That's right. That's right.
All right, so we got time for one more. Is there anybody else who could use some help with the fib and is brave enough to come on in front of the class and identify some uptrends and downtrends with the fib?
I'm in a minute. I can, but I'm on my iPad.
Okay, that's cool.
Can I help?
No, baby. But I'm on my son's with it.
All right, you are good to go.
Share screen. Zoom. Start broadcast. Okay, hold on. Can y'all see it? I don't know.
Yep.
Okay. So what page you want me to go to, Talonsa?
What you on right now? NAS? Okay, that's cool.
Yeah. Yeah, I'm on NAS on Jayla. I'm
So
talking.
what? I'm
I'm sorry.
I'm gonna put you on the spot. What is NAS?
What the top 100 tech companies?
Yep. Good, good. Glad you know what you trade. Good stuff.
Okay, so this is what I have for the daily. Do you want me to do a retracement on this one right here?
Yeah, so what you know what?
I'm sorry if it look all crazy. It's just my badness.
No, you good. Yeah, what's the retracement? Let me see the retracement of that move you got marked up.
And you want to know what to how far it came down? I'm so sorry. Give me Jayla. On the iPad, I need you to go upstairs or put that on me. Thank you. Sorry about that. Okay.
It's good. Can you measure the first one that you got marked up, that longer extension?
Yeah, give me 1 second. I have it on lock, so it's trying to pull up another fit. Okay, there we go. Okay. So the first one came down like right past the golden pocket, and then it retraced back up right almost to the 38.2.
So this is an uptrend that you're measuring, right? Or you consider this an uptrend?
Yeah, I consider this an uptrend. I felt like it started consolidating. Yeah, I felt like it was consolidating. Well, I don't know how to use. Hold on. What's the arrow you use, Delonte, when you point in certain areas?
Yeah, it's in there. It's in a trend line. There it is, arrow.
Arrow.
Yep.
And do I put it on lock or no?
Should be able to just tap the screen.
Okay, sorry.
It's cool. I see the green arrow though, and I like how I see the reversal, the red line, it says reversal. And so I see you got the eyeball. So I'm guessing that basically if the market drops below that low, then that's a potential reversal and you're gonna start looking for sales at that point.
Yeah, I was gonna do a sell stop right here. Actually, I think this move happened, I think on the opening of Sunday, but I didn't take it. But I think that happened around on Sunday right here.
No,
yeah.
that's good. That's good. That's showing me that you're looking at the market right. Can you measure that first move for me though? That first move that you got the low, the high, the higher low, and then the higher high. That long move right there with the shallow retracement. How much did that retrace? Nope. The other move that you got marked up. You brought it all the way up from the monthly down there.
Oh, okay. I see what you mean. From the right, all the way at the bottom.
Yep.
Okay. So do I pull it from right here?
Yes.
To right here.
And you can pull it right there. So that didn't even retrace 38%. So this is what I want to show you though. So go ahead and pull that, delete that fib. And I want you to scrunch NAS 100 up the other way so we can see more information to the left. Right, there we go. Okay. So what I want you to do is the line, you got the one line, Drew.
Mm-hmm.
Delete that little pullback that you created. Delete the little pullback.
Hold on.
Yep, delete that one. And delete the other small one too.
I think that's the only one. You're talking about this right here, talking about the extension at the very
Yep.
top.
The little small one, the little extension. Yep, that one.
Okay.
And then pull the long one all the way to the top.
Got too much. I got my imbalance marked up. Okay.
Yep, pull that all the way to the top. And then create the retracement that it came from and the extension.
So you said do the retracement.
Yeah, so at the
From
bottom.
from right here.
Nope, all the way at the bottom. Yep, right there. Pull, yep, right there, and then the retracement. And what you had was correct, but now I want you to look at it in a different, I want you to look at it from a higher time frame perspective. So now you're looking at, you got that area where it says reversal, and you can start looking for sales right there. But to prevent yourself from getting staying in the sell too long and the trade reversing on you, let's go ahead and pull the fib from the bottom of that extension to the top of the extension, and let's see where 50% is at. Let's see where 38% is at, and where 50% is at, and where it's most likely to react. So you know where to exit the trade, because is this bullish or bearish institutional order flow that we're looking at from the higher time frame?
Bullish.
Bullish. So if we come down to that 38%, it's a chance that we could reverse from that 38%, right?
Right.
And it's a chance that we could reverse from that 50%. So this is how you decide where to take your profits at if you decide to sell and do that sell stop and don't get caught in drawdown because it turns around and reverses on you.
Right.
Right. So you can do that, and you can actually you could really wait on the buy too. But this is a buying opportunity. So now that we're looking at it from the higher time frame, we can look at this whole thing as a retracement. And we got our 50%, we got our 618. So like I said, the way you had it marked up before, that's correct as well too. But you want to make sure you're looking at it this way as well, so that you can make those decisions on when to enter and exit the market.
Right. Okay.
Right. And one more thing, the 9 and the 40, those don't go together. Only the 40 and the 18 and the 9 and the 18. You still there, Tisha? Tisha, you still there? Okay. All right, is everybody still with me?
Yep.
Yeah.
We here.
I'm here.
Mike's not
Yes,
muted,
sir.
so
We're here.
What if it's no, does anybody have any questions before we end the call? Oh, all right. Well, good job, everybody. Pat yourselves on the back. I think Letitia got kicked out. Pat yourselves on the back for showing up. Each time you show up to one of these calls, it's very important to show up to these calls. I believe coming to these calls is just as, if not more important than the actual course itself, because you can go through the course, you can learn things, you can learn from the videos, but I only explain it one way in the video, right? I can explain it different ways, and sometimes you just, you pick up different things when you actually hear it on a live call. You may hear it explained in a different way. And if you continue to come to these calls, you're going to continue to learn. And the more that you learn, the better you're going to get, the more accurate you're going to become. And just, stay close to the fire. Stay close to the fire. You might get burned. Stay plugged into it. One thing that I've noticed a trend, a pattern. I'm really good at picking up patterns. And the pattern that I've recognized is the students that stay plugged in, the students that come to the calls, the students that ask questions, the students who aren't afraid to share their screen and learn some things. Those are the students who excel. Those are the students who excel and find success in the market. So just keep doing what y'all doing. Keep showing up to the calls. Keep asking questions. Y'all doing great. I am going to send you guys a book on Fibonacci. If I send y'all a PDF that my mentor sent me on Fibonacci retracements and extensions and the tool, would y'all read it? Are y'all gonna read it? It's a PDF. I know it's kind of hard to look at a screen. I like books myself, but it's a really great book. And if you want to get better at using the Fib, it's a great book to read. It's a PDF, and I can send you all the email if y'all interested.
Yeah, you can send it to me, bro.
I'm interested. This
Okay.
is Elicia and Nate.
Got y'all.
Okay. What's the name of it?
It is called the
Shoot it.
quick second. I'm gonna get you the author. I'm gonna send it to you, but I'm gonna get you the author and the name. Let's see. All right. It is called Fibonacci Trading: How to Master Time and Price Advantage. And it was the author is Carolyn Borodin or Borodin. But it's called Fibonacci Trading.
Okay.
McGraw,
That's the one I want too. It's $50-something on Amazon. Thank you, sir.
You said it's
That's the one I wanted.
Oh, so y'all heard that? A $50. I'm about to send y'all a $50 PDF.
Clutch.
For free.
Much obliged, brother.
Because I want y'all to win. All right. So I'm gonna be looking out for that email. And if no one has any questions, like I said, if you're trading live, don't forget to shave your risk and be careful in the markets this week. And I will see y'all in the chats on the charts. Remember to always stay safe, but stay dangerous. Peace.
All right, y'all. Have a good one.
Thank
Have a
you.
good night.
Night.
No problem. No problem. Good job, everybody.
Peace.